So what I explained today, guys, I'm repeating. A company may purchase a running business, and when it purchases a running business, it acquires assets of that running business and external liabilities of that running business. The difference of assets and liabilities is called net assets. If purchase price, the price which the purchasing company has to pay to the selling business is more than the net assets, then the difference is debited to goodwill account. And this happens in the books of purchasing company. So goodwill account would be debited by purchasing company if purchase price is more than net assets, and capital reserve account would be created by purchasing company if net assets are more than purchase price. For this, Manya, have you understood what I explained?
Sir,
आपको समझ में आया ये? मान्या, मैं आपसे कंफर्म कर रहा हूँ, आपको समझ में आया ये? So let's understand this with an example. Example 15. ABC Limited purchased the business of Rohit Enterprises and acquired the following assets and liabilities. Land and building of rupees 14 lakh 20,000, furniture of rupees 3 lakh 60,000, stock of rupees 5 lakh 70,000, debtors of rupees 2 lakh 30,000, creditors of rupees 3 lakh 40,000, and bank loan of rupees. Past necessary journal entries in the books of ABC Limited if the purchase price is discharged by issuing shares of ABC Limited of rupees 10 each at a premium of rupees 15 per share, where the purchase price is rupees 16 lakhs, B rupees 15 lakhs. I hope guys you all have understood the question, right? ABC Limited has acquired the business of Rohit Enterprises and this is how it has got ownership on these assets and these liabilities. The purchase price would be either rupees 16 lakhs or 15 lakhs, and purchase price would be discharged by issuing shares of ABC Limited of rupees 10 each. This is face value per share at a premium of rupees 15 per share. It means the issue price is rupees 25 per share. Journal of ABC Limited. When purchase price is equal to rupees 16 lakhs. First journal entry would be done by ABC Limited. Since ABC Limited has got these assets, and that is why it will debit all the assets in its books. So land and building account debit, furniture account debit, stock account debit, Datus account debit. Guys, मत लिखिएगा भी हैं. Do not write. And since it has got ownership on these liabilities, so now these liabilities have become liabilities of ABC Limited, and that is why they would be created here to bank loan account with their respective values, that is 14 lakh 20,000 for land and building, 360 for furniture, 5 lakh 70 for stock, and 2 lakh 30 for debtors. And creditors are 340, and here we have 690. Now total assets are of 25 lakh 80,000 and total liabilities are of 10 lakh 30,000. So 2580 minus 1030, that is 15 lakh 50,000. So 15 lakh 50,000 is net assets, out of which if 16 lakhs is payable, then we will credit to Rohit Enterprises. Yeah, it is Rohit Enterprises with rupees 16 lakhs, because how much we have to pay to Rohit Enterprises? 16 lakhs. But the net assets were 1550. It means we are paying 50,000 more, and that would be debited to goodwill account. Here you can debit goodwill, guys. In partnership, we cannot debit or create goodwill because there we do not pay anything for goodwill. Here, something would be paid by ABC Limited, and that would be in form of shares. Am I clear? So, this goodwill actually here is balancing figure. How we have got this 50,000? By balancing the two sides, right? This 50,000 is nothing but it is excess of purchase price over net assets. Right, Shubh? Manya, are you getting this? Acquired various assets and liabilities of vendor business. We do not need to write the name. Why? Because that name we have already recorded here. And debited goodwill for excess of purchase price over net assets acquired. Is it clear to all? In the second entry, we will calculate how many shares we have to issue. So number of shares to be issued. Before that, issue price per share is face value per share plus premium per share, and that is 10 plus 15, that is 25. Because shares of rupees 10 are being issued at a premium of rupees 15. So issue price per share is 25. So number of shares to be issued is equal to liability to be discharged in form of shares divided by issue price per share. What liability we have to discharge? How much? Very right, 16 lakhs divided by 25. Am I clear, guys? That is how much? 16, that is 64,000. Correct or not? So in the next entry, that is in the second entry, we will debit Rohit Enterprises account. How much we have to pay to Rohit Enterprises? 16 lakhs. With which Rohit Enterprises account was credited here. It was credited with 16 lakhs, right? So that is what we are debiting here. And we will credit share capital account and securities premium account. How many shares we are issuing? 64,000 at the rate of rupees 10 per share, that is 6 lakh 40,000. So 6 lakh 40,000 will be created to capital account and 64,000 into 25, that is, sorry, 15. That is 640 and 320 means 9 lakh 60,000 would be created to securities premium account. This is how we have discharged our liability towards Rohit Enterprises. To discharge liability towards the vendor business by issuing shares at a premium. That's it. Am I clear? Note down this, guys. You all have noted down the question. Yes or no? Manya, you noted down the question, right? Note down the entries, guys, the solution from here. मान्या आपने नोट कर लिया था यहाँ तक पूरा, राइट मान्या?
Sir, does
Okay. Assets that we have got, the assets that we have got are of 25 lakh 80,000 and we have got the liabilities of 10 lakh 30,000. It means net assets are 15 lakh 50, but we have to pay only 15 lakhs. It means we have profit of 50,000 that would be created to capital reserve account. Why? Because this profit is of capital nature, right? And credited, you can start noting this down, guys. It means we are paying here lesser purchase price than the value of net assets that we have acquired. That is why we have profit of 50,000, right? The net liability towards Rohit Enterprises is 15 lakhs, that is this one, and issue price per share is 25. It means number of shares to be issued to Rohit Enterprises is 60,000. So the next entry would be Rohit Enterprises account debit with 15 lakhs Two share capital with 60,000 into 10, that is 6 lakhs. Two securities frame account with 60,000 into 15, that is 9 lakhs. Right? And with this, guys, we have completed issue of shares for consideration other than cash. That title is over, right? Sorry, क्या बोल रहे हो? बोलो। हम्म। रॉकस्टार कोई गेम है? क्या?